The hardest things to keep track of, all the financial information. I want to start today's Money Matters segment off with an interesting perspective on what this all means. Joining me now, Seth Kaplan of Baird Wealth Management to talk about the numbers. CPI report came out today. But over the past several months, I've been noticing the reports of all this inflation data, consumer spending. It's up and down, and it's kind of hard to keep track of. For the average person out there who's trying to invest and trying to get ahead of the game, how do we interpret all of this?
It can definitely be very confusing. Numbers don't necessarily go up or down in a straight line. Over the past few months, we have seen it continue to come down gradually, but the numbers have been sticky. So it can be overwhelming. Typically what I advise clients is to not get too caught up into the short-term numbers and really just stay focused on the long term.
And you said the bumpy ride is kind of what we should expect, up and down, right? Not too dramatic.
Very much so. I mean, if you look at economic cycles, we do go through periods where things are getting a little bit worse, a little bit better, and as long as the general trend is going in the direction we want, that is a positive.
Go with the flow.
Yes.
When we talk about the CPI report that just came out this morning, month over month stayed the same. We haven't done that for a couple of years. And year over year, it looks like it's gone down a little bit. Consumer price index we're talking about here. This is good for the feds, right? They're supposed to speak about this after their meeting today.
Yes, in general, the Federal Reserve, which controls interest rates, it is a tool that they use to try and either speed up the economy or slow it down. Typically, they're going to keep it high if they want to slow down the economy because inflation is too sticky or elevated. And that's kind of where we're at today, where they are looking for data to give them the comfort to lower rates.
Right. Yeah, Jay Powell, the Fed chair, always says the data will guide us, the data. And this is good news for that data because it, again, signals the downward trend, what we want to see. But we still don't expect them to do that till later this year, correct, from my understanding?
Yeah, they've been pretty diligent with the idea that they want to see the trend continue. 1 month's data isn't sufficient to indicate exactly doing something. So I think that the data that came out today was comforting, but in good likelihood, they're not going to lower rates today.
Just based on this one report. Let's also talk about something that you mentioned. Focus on what you can control over. You touched on this a second ago. All these numbers can get us all jumbled up. But when we talk about retirement savings, which has taken a blow over the past couple of years, we don't want to get too caught up in these numbers. Again, the trend is the important thing.
Yeah, for the average person, whether or not inflation's high, whether or not it's low, interest rates are going to stay at the levels they're at or go down, you still have to put money in your 401k for retirement. You still have to fund your kids' college savings. Make sure you build up emergency savings. Prudent planning is something that you have control over. So that's what we typically advise clients to focus on.
Yeah, we can't control what the Fed does as much as we'd like to, but we can control our own spending. And even if you have to cut back a little bit, still invest in those important things. Seth Kaplan with Baird Wealth Management, thanks so much for joining us today and helping us kind of sift through a bunch of what I consider very confusing numbers. We appreciate it. Thanks so much.
You bet.
All right, one of the